Welcome traders, and in this video we're going to be looking at the currency correlations. So I'm briefly going to run through the different topics of the currency correlations and how they work on the charts. But what a currency correlation essentially is a relationship between two different currencies. So obviously we're going to be trading currency pairs, which contains two different currencies. And obviously there's going to be different overriding factors for each an individual currency. So for example, here on the chart in front of us, I have the candles are the EURUSD, and this line that we can see here is the correlated data from the dollar index. So this is the EURUSD versus the dollar, and we can see here on the chart that it has a negative correlation, and it has a negative correlation because the dollar is the second currency within this currency pair. So euro versus dollar, 1 euro equals X amount of dollars, which is the price on the right hand side. So when dollar gains strength, obviously Euro USD will decline because it is the second, it's the cross currency. It's not the base currency, it's the cross currency within that currency pair. And obviously you're going to have different correlations between the different currency pairs: Euro USD, USD JPY, USD CAD. And obviously this dollar effect is going to affect all of the different currencies, so it's important to understand their different correlations between them. So overall, it is important to understand the actual correlation between the different currencies and how they operate, and the circuits, the certain situations that you might actually get into when you're actually trading, because you don't want to trade against the correlation, but you also don't want to trade based purely off the correlation, because correlation over time does change and it does get manipulated on the lower and the higher time frames. So you need to just be aware of it, but also obviously treat each and individual chart, break it down as it is on its own, and then use that breakdown to analyze that single currency pair that you might be looking at. So here again on the daily, we're looking at the USDCAD this time, with the line being the dollar index. So we can see that the correlation here is positive. It is moving in the same direction overall. So for example, if we might look at some US data, US fundamentals, US news, look at what's happening with the dollar, what's happening in the USA, and then that could also determine and impact our trading decisions around the USD CAD. So it's important to understand the base fundamentals behind each an individual currency and index in order to get better situations and better trades. And here we have the gold chart, gold versus the dollar, and the line is the dollar index. And we're here on hourly. I was just monitoring the correlation between the two, and we can see that it is semi-correlated, negative correlated, because you can see here that we've had a bit of a push up on the dollar index at the point where we were slightly dipping, and then obviously we're bullish now on the gold. We've had a little short ball run with the short decline on the dollar index. But if you was to flip back to a higher time frame, for example the daily, perhaps even the weekly, there are certain moves that are correlated, and there are sort of moves that aren't correlated. So it's just quite interesting to understand the correlation between the indexes and also some commodities in order to find trading setup. So overall, to conclude then, to be a well-rounded trader, you do obviously need to understand the exposure that you're actually having on your account when it comes to market correlations and the way the different instruments move, especially those indexes. But obviously by recognizing those patterns and trading what you see when it comes to each and individual chart, is obviously you're going to gain a lot of experience and be able to understand the technicals and the fundamentals and be able to correlate them together in order to find the trading setups and make certain trading decisions. Ideally, if you are looking to open up multiple trades around a certain currency, then it's probably best that you pick maybe one or even just two of the trading setups. Let's say you have a certain bias on the dollar, then rather than entering EURUSD, Australian dollar, US dollar, and the USD JPY, for example, just pick maybe one or two of those setups that correlate with the dollar or have the dollar involved, and then trade those rather than trying to catch each and every move that the dollar might make compared to the other different currencies out there. But obviously, despite all of this, and regarding your trading plan, and obviously when it comes to broadening your watch list of instruments that you're looking at on a day-to-day basis or on a week-to-week basis, when it comes to actually identifying trading setups, it's important to keep your mind in terms of the correlation. When it comes to the higher time frames, especially, where's the dollar moving, what's happening with the pound. Maybe you're looking at a yen pair or a set of yen pairs, and is there any yen news coming out, yen strength, yen weakness, and then obviously you can take your trading decisions from there with more calculated risk of exposure, and understand actually where the different currency pairs are going and what's being influenced at that time. Because as we know that there's many trends and many different bull runs, bear runs that the Forex market can provide, and commodities. So it's important to understand the different correlations when it comes to identifying those trends that you do obviously want to get involved with when it comes to making a profit from the Forex market. So that's all for now. Be sure to check out the blogs and stay tuned for more videos to come. Cheers.